obviously it was dovish, Fed minutes. Would you agree?
Yeah, I think they're becoming slightly more dovish, which I think is a good thing, although you can, of course, argue about it. Inflation is, for now, largely a ghost story, so they should be cautious.
They're questioning, they're rethinking the part of it is the Phillips curve and essentially the broader conversation why there's no inflation. Does that make me more or less worried of a potential policy error now that they're perhaps coming to grips with what's actually happening on the ground?
Well, it should make you, I mean, if the Fed is pursuing, I'm not saying they are, but there is a risk, right? If a central bank is pursuing policy on a wrong assumption, of course you should be worried, generally, right? But I mean, it's not the end of the world. The Fed is basic. I mean, if the Fed's inflation target were to be 1.5%, they would have been doing a great job. It's just that it's 2%. So
why is it 2%? Why is it? It feels like a nominal number, but why is it 2%?
Well, the 2% is a good question, but the 2% is basically a reasonably high but low inflation number. Okay. And the reason you need it, Japan being a very good example, is that, of course, the better part of GDP of an economic story is always the real growth, the productivity-based growth, and these things. But you need a little bit of inflation in there because it's like a grease, you know, like an engine needs a degree of grease to run smoothly and to have some downside protection. So that's where you need a reasonable amount of low but positive inflation.
And you think at the moment their policy is marginally a little bit too tight. Why is that?
Well, because they have and it's not only the Fed, but there is this philosophy that the extraordinary support that was provided during and after the financial crisis needs to be withdrawn for the sake of financial stability. But I'm not really buying that school of thought because you can always argue, you know, the appropriate policy is always the policy that is appropriate for your stated goals, rather than other things that may be out there or not. If you're worried about financial stability, credit growth and so forth, you could, that's a regulatory issue rather than a monetary policy issue. Monetary policy should be focusing on first of all, meeting your stated targets if you have some, more broadly speaking, monetary stability. The Fed is doing a reasonably good job, and I think it's encouraging that they're acknowledging that, they might have been not entirely correct, so to speak, on their inflation expectations. Right? Yeah, the Fed is still one of the most credible central banks out there. So, we're complaining here at a very high level.